Welcome everyone to the Kendall Report. It is Wednesday night and we've continued to see the markets come under pressure, down yet another 1% on the S&P 1.11, NASDAQ 1.68, and the Russell down 1.52. And you may have noticed the headline for tonight's video is, is support going to hold? Markets have remained throughout so far the whole week. We've continued to be under pressure. And I did see a comment, and I'll take that up, is what about 42.50? Well, ultimately, markets are going much higher than 42.50, just not right now. So 42.50 ended up to be 42.08. When you do projections on the markets, folks, the market's got the right number. You can only estimate what's going on. So after that big reversal, we got off of 42.08. We're seeing a fair amount of continued pressure. We're getting potentially close to the markets coming into some key support. There's a couple numbers I'll talk to you about here in just a few minutes. And I keep promising you that I'm going to do a yield curve analysis, and I'm still not going to do it tonight. I'm going to try to do it by the end of maybe tomorrow night. We'll do that for the final video. But for right now, to stay focused just on the main technicals and things going on. There's no news coming out this week. So we've been driven by market sentiment. We'll say some of the comments from the presidents around of the Fed, those kind of things have been driving market sentiment and overall earnings and all those types of things. There's a fair amount of earnings coming out tomorrow, but we're really still not into any kind of nothing really major, but there are some things that are likely to continue to keep sentiment a little negative here. We're not quite negative enough to maybe get a reversal. We did see Disney come out, and I started to make the headline, "Can Disney save the market?" We got a little bit, I think, from Disney's report. We're up 875 as I look at the futures right now. So really nothing really material going on. So let's talk about the only economic news tomorrow is claims and continuing claims. Claims are expected to come in around 194, which is a little lower number, and continuing claims at 1.655. And it's interesting. I could not stomach, I have to admit, I could not stomach watching any part of the other than a few clips that I've seen of the, Biden's address last night in the State of the Union. Did think it was funny. My wife said, already know the state. I don't need to watch it. It's kind of funny. I thought that was a pretty good comment anyway. But the bottom line is there's just, from a fundamental standpoint, we're just in a standstill right now. There's really nothing out there to get excited about, and we're just seeing this grinding. I will make an argument tonight that we're still basically stuck in a broader sideways range that we've been in for a while. So I'll make that argument in the technical section here tonight. I don't see this being a long video. There's not a lot to talk about from the standpoint other than some of the things that are going on in the technicals, and that's really all we have. Um, so database is getting interesting, still acting as I suggested it would over the last several days. So we'll go through that here in a minute. So let's just go ahead and get into this. I think we can keep this video probably under a half hour tonight, and let's get into it and do it. So here's a number. If you remember, just a few days ago, we were at 80% bullish. We're now at 71.71. We had 1,445 sell signals for tomorrow's opening. So we're starting to see that big batch of rotation I talked about moving toward 68, 62%. Looks like that it's going to be a continuing process here. And I don't see anything stopping that. I expect it will stay above 58%. Just a matter of what kind of rotation we really get. And just looking at some of the sectors here, I'll bring that up full screen here. We're looking really at most of the sectors that are long. They're still got a ways to go from the standpoint. Materials has been on for 22 days. The longest has been technology. Has been on for 60 days. It really is only up 7%. And typical, if I'll click on this and tell you what that normally does here is what we normally get is sorry, I didn't mean to click on that page. Bear with me 1 second. Yeah, normally we get here about, actually, this is a little longer duration. We're at 56 days is normal here. I'll pop this up full screen. You'll see it. 60, so we're 60 at 56. It's actually just extended just by 4 days. And the only thing here is that the typical projected profit is 15, and we're only about 7. So we didn't get any real big bang for the buck here on this one. So that seems to be what's happening. Some of these short-term trades have acted really, really well. And I was going to put together a portfolio that would illustrate all the stocks that got hammered last year. Those have been where all the money's been running into. So a lot of these aren't affecting the indexes at the level that we thought. And I've talked about this for a while, is that the secondary stocks are where all the action is. So just looking at what's going on here, we're just seeing a pretty decent liquidation. I think if we look here over the last couple of days, we're looking at roughly right now about 5,500 sell signals versus about 2,500. So we've got a net 2,500 sells coming in right now. So we're starting to see this getting a little weaker in the like I said, in the bullish percent on the short end. This type of action, however, is not going to affect the intermediates that much as we come into Friday. We'll see what kind of day we get tomorrow. Tomorrow night I'll come in and I'll do my best to show you exactly what my expectations are for the Friday run. I still expect to see the potential, I'll just mention it right now, that I think we'll get over 60%, 62% on the intermediate. So we're still getting a lot of long-term traction. And the real thing here is just that the markets are consolidating on an intermediate level. So more and more stocks are starting to come into favor. All right, as usual, we'll start with the hourly chart here on the S&P. It does look like we have some weakness for the next couple hours. We're going to pull back from some of these numbers. If we can, coming into about, I'm just looking at the numbers here, probably coming in into a little later as we get closer to London. If you watched the markets last night, I talked about having some weakness as we came into the London opening, and we got just that. Matter of fact, initially there was a response the first hour of London, and then we got further weakness overnight, and it continued to go down. So there was pretty good opportunity on the overnight markets. And matter of fact, a lot of the money that you could have made was actually doing something in the overnight markets. That was where the action was at. Yeah, so yeah, no rants. I just saw a comment here. No rants tonight. There's nothing. I actually had a really good rant in the live room, and I'm saving that. I want to research a little bit some of the things that I talked about. I do think there's some very interesting things coming up, but it's just not an appropriate time. Maybe that'll get saved for Sunday night, a little longer term view. But as far as the hourlies go, it looks like we've got some weakness coming into London, and then the potential for the markets to firm. And we're looking a little far out, but as we come into tomorrow, we should see probably tomorrow U.S. Open, we should see some interesting numbers coming out there. And this 4,100 number that we've been printing the last couple of days, let's go over to the daily charts here, and just to get a good feel for this. And this is something that we were talking about, and I'm going to go through some analysis that we did do on the short and intermediate on the indexes, and just know this applies across the board for the most part. I mentioned last night that the Russell was actually kind of leading the way down. We did get some more weakness. As we look at, this is the daily chart, we're sitting here right on the support levels at the moment at the 10-period moving average. You know, I've got, this is the cash. Let me get the E-minis up here. So yeah, so this is the futures. You can see the algos this is daily, are starting to project we're going to see some lower numbers. So what I'm expecting is that we'll take out the 10-period moving average. That's at 41.24 right now. We're trading 41.39. If we get through that tomorrow, I'll give you the market grid numbers here in just a minute, but it does look like there's some potential weakness. We also got some Fibonacci targets to the downside, which suggests that we could see market trading down into the three targets is 39.30, 38.23. I don't see us getting below the 200 here, which is at the 39.41, but I do see the possibilities here of testing the 21-period moving average, 40.61, and I will also bring up on a weekly chart, we also have some really strong support right around 4,000. So this is the support levels that I was talking about that I think we're going to be able to hold. And those numbers are going to be 40, we'll go ahead with this number, 40.60 to 4,000. Those are going to be the key supports. And if we break through the couple things, if we break through the lows that we made on Monday, which was the 40.98 level, we look at I'll mention market grid. I'll bring it up on TradeStation here in just a minute, but we're looking at S1 is 41.15. So that's going to be your mark to pay attention to. 41.15 gets taken out. The next level below that is going to be 40.99, retest of Monday's low. And below that, we're looking at 40.82 and 40.68. So we got almost to STX. Somebody made a comment that S3 made their day. I saw somewhere on Twitter or somewhere, I was looking earlier, and anywhere from S2 to S3 today was the place to take profits. It's going to be very similar. I marked down that I think we have, if we hold 14, then we'll do an S1 R2 tomorrow, which let me bring that up on TradeStation so you can see exactly where that is there, and it's a little more obvious. Let me get full screen. And so here, S1 41.15, S2 44.15, 40.99, basically 4100, and S3 is 40.82. But this is the key. If we get through 41.15, then we're going to start to see some downward pressure, and I don't think Monday's low is going to be able to hold. Whether we hit it on Thursday or we continue weakness into Friday, we're probably going to see these lower numbers get tested. Yesterday, I just want to bring this up. STX yesterday, we were in the live room and we printed down to 21. It was just below S3. We actually had some intraday, hourly, and off a 5-minute chart, we had some Fibonacci targets intraday printing, showing us down around 41.15, 41.12. Market caught a low there at 21, and they bid it back up into the 30 handle before the close. There was some decent short covering coming into the close earlier today. So there's some reasonable support down here, but that's going to be, for me, the pivot for tomorrow, 41.15. Excuse me, if that's taken out, then we should see these next levels that I'm talking about here. But here's the key, so hopefully I won't confuse you. If 41.15 holds, then what we should see, let me get it over in the right number here, 41.15 holds, then we get S1, R2, so it'd be 41.15, 41.61, which keeps us in this sideways range we've been locked in since we printed in that 42.08 last week. We come back into these moving averages, into the pattern. Market grid is just kind of a very tight consolidation. So sometimes we get into these type of patterns, even though the algos are suggesting that we're going to get through these numbers, that support holds. So you just have to watch these numbers. If we get a clear and clean break through 41.15, then expect to see these other numbers here in the sequence. Let's go back to Trading View here. So you can see what the algos are doing. I'm going to bring up the weekly. So this is where there's a little bit, and this is where I'm probably going to confuse you, but I'm not doing it intentionally. If we look at the weeklies suggest that the algos are completely different. And I went through this detail today in the live room, is that sometimes what will happen is you'll look at the short-term charts, they look really negative, and you don't look at the intermediate charts. That's where the action is going to be. So you need to actually have a understanding of the larger trend that might come into play. So this is where the 4100 number comes in. If we look at the moving averages, 39.87. So as we come into Friday, the current rate of change of the PPM1 and the moving average and that angle of attack is going to push us right to around 4100. And what's happening, if you look at the algos, as we go out a couple weeks, all of a sudden the algos are suggesting we're going to get into trend mode. We're not in trend mode at the moment. We're at 0.16 on PPM1. Stay with me. I'm going to make a point here in just a second. So what happens here is this is turning up, but also notice that algos on PPM2, PPM3, even the weekly 200 is starting to show acceleration. So now all of a sudden, the probabilities on the intermediate charts are going to override any of this short-term weakness. And so we'll get a chance to see this possibly. That's why I targeted this. If we break through this 15 and we take out Monday's low and 40, 52, 40, 62 with an extreme of 4100, that's going to be one of those points, like I talked about several weeks ago, that you're going to want to be watching, looking for a reversal off of there. You might be able to catch it off an hourly chart, but you want to fine tune that point in time when you get there. And if that occurs, we should get a decent bounce, and these weekly charts are going to dominate going forward. All right, let me come on screen here for a second just to make this clearer. So hopefully I'm making myself clear. The intermediate charts are what matters right now. The short-term weakness is what it is. That this is a major support zone here on an intermediate level, and this ties together with the 58% of the database being long right now. So that means that, there's quite a bit. There's close to 10,000 stocks that are in trend mode. an intermediate level. That tells us that these intermediate target zones as support levels around 4,100 are likely to hold. The probabilities are stacked in favor for this to hold. So be really cautious about trying to get super negative and thinking that all of a sudden we're going to go back into a new low. There's something else on this chart. Stay with me. I'm going to draw a couple of things. I'm going to go back full screen. I'm going to bring up something. I want to make this point because this is one of the key things, and I'm not going to carry it any further than where I'm going to tonight on this as far as the long term is going. I just want you to see these are Fibonacci targets. Okay, so those numbers are suggesting that a minimum 4466. That is, I'll take out that's this arrow right here. It's 4466. That's a minimum target. We talked about it today. This high is a high that a lot of folks are saying this is your resistance. This point doesn't mean anything in the pattern. And those of you that have been in the live room and have the indicators, let me just point out what's going on here. What's happening, this is one of these classic 1, 2, 3 Elliott patterns. It could be an ABC. It could be, we could be entering, I'm just going to change colors so you make no mistake that this is the projected that we could be entering into at least an ABC where 1 and 3 are equal. That's where that green arrow is right here. That is 1 and 3 equal, A and C equal. Typically, you'll get a ratio of 1.382 times there, and that'll put you up here at Fib target 2, and Fib target 3 then is 1.618 times the length I'll draw of this first pattern here. I'm going to make it big, fat, and ugly so you can't miss it. But this pattern right here is what I'm talking about. And it's all projected from this low point. And I'm going to clean this up so you can see, get all the lines out of there. But you see there's a triangle at the bottom. This is our algorithm picking up these high-low pivots. So it's projecting these values over here, right there, off of those patterns. So this is way too big, and I'm just going to combine this together so that you understand what's going on here. I'll just combine all this together is because of the database and the amount of traction we have there, and especially this will be confirmed if on Sunday night I come up and I'm talking to you about a 62+% bullish on the intermediate. Now all of a sudden this thing is going to be start to target this up. If I look at the upper end, the Fib target 3, that is Fibonacci target is at 4,800. That's an all-time new high. I don't think that's going to happen, but I think we'll see 44. If you've watched me for a while, you know I've mentioned these numbers before because about this first projection came out on January 17th, and this is the first time this weekly projection came out on these patterns. So this was the projection point, and this was, the beginning of this next level trend. And if you look back on, I know I was out of service then, so to speak, but those of you that have Wavetech, you'll know that we started to get some decent traction above the 42% level right in that area. So now, like I said, we're at 58. I think we're going much higher on the percent bullish, and it's going to push this forward-looking scenario that I talk to you about all the time on the database. It's going to push everything a bit forward from there. So this is a big point to make, because this what I'd said in the live room today is if this pattern is correct, and I believe it probably is, the probabilities point to that we will see at least 44, maybe a 46 handle. If that's happening, this needs to influence how you approach the markets over the next several weeks. And if you look at things, we don't have any Fed meetings, and earnings are going to be over here. We've got a few more weeks of earnings, but for the most part, we're getting a lot of the material stuff. So the markets are going to start to look at some other things. Don't know what they are at the moment, but this is going to perpetuate this basic trend. So I went in deep on this chart. What I did today, and I'm not going to do it tonight, what I did in the live room today is I carried going out to a weekly and even an annual chart, and we start to look at some of these trends. And I'm going to, hopefully I'll be able to put that together on Sunday night, but you will hear about it very soon. I may actually put something together if I get some extra time just to draw some of this stuff out and maybe put it in the Substack newsletter. Something like that will come out. And for the moment, the Substack newsletter, which is kendallreport.substack.com, if you haven't signed up, sign up. I'm going to release a couple of things from there, by the way, that we're going to get. I'm going to release our complete screens for this month because I think that you need to be aware of fundamentally which things are coming into play right now. And there's a whole lot of very interesting things coming out on the screen. So I'll probably put that out. I put out a mini version the other day, but I didn't have the headers. It's like, what are these numbers? I'm going to put the full thing out. It'll be on an Excel sheet. So anyway, I'll do that. But I want you to understand that this pattern is what's driving my analysis, and it's all in this little web that I have between the database and the technicals, the angle of attacks, the intermediates, and trying to do what I call a multivariant approach, looking at different time series, going daily, weekly, and I'll probably carry it out to monthly, annually, and even a quarterly viewpoint. You start to get into super long, there's some really interesting things happening, and they're probably not what you expect. So I'll start developing this story. It just kind of came out today in the live room, so that was a good thing. Anyway, so let's move on. Let's get through the rest indexes. I told you we're going to get done in 30 minutes. I just ran it on for 10. So we'll get through the rest of this stuff pretty quick. It's pretty straightforward. But keep this in context with all of these, including I'll leave these same metrics up as we go through the NASDAQ. So let's go ahead and go to NASDAQ here. All right, so I'm on weekly, so we'll stay here. The weekly in the NASDAQ is not as strong, but the algos are suggesting we're going, as far as the Fibonacci targets go, slightly different pattern. We went a little deeper on this shoulder here, but if you look at the weekly algos, they're all projecting that the 10-period moving average is going to turn up. When you see the PPMs, those of you that have the PPMs, is when you see a configuration like this, they're good for, these algos are good for maybe 3 bars out. And so in this case, on a weekly, you know, that puts us out toward the end of the month. I talked about this. It looks like a general bias in February to be positive, even though we're seeing a little bit of a pullback. If you look at last month, though, you look at January, you know, we're really just doing an inside bar at the moment. We got plenty of time to go forward. This is just February 8th. But the algos are all in the same position of everything I talked about just a minute ago. So let's take a look, and let's go to the daily here. We're getting some downward projections. Same scenario, right? The short term looks negative. The intermediate term looks like there's major support. And so I'm going to back and forth just for a second here. So we're looking at the 21-period moving average here, 12,058. We're trading 12,589. So there's definitely some potential downside. The pivot is 12,465. You take that out, you're looking at the potential to go down. I'm going to flash back to the weekly because I want you to see where that 10-week moving average is way down at 11,600, but it's going to turn up, I think, at a pretty decent number. The algo is projecting that we're going to get up to about a 0.6, 0.8 on ppm1. So that tells us that, and this is also important. Man, I shouldn't promise we're going to get done soon because a lot of stuff is coming up right now for me. But I just want to draw this in. What's going to happen with these moving averages? Let me get a thin line. What's going to happen? You can see they're all located right here. Right now, SMA 10, 11.6, 11.5, and 11.9. So we have everything basically clustered in this area. So this is solid support, and especially with everything focusing in on the algos trying to continue to advance in that angle of attack, which tells you that the moving averages are going to start to rise. When they do that, we've been in this downward sequence forever, and right over here, I'll draw a quick arrow here. As if you notice right here, we broke first, second derivative. We actually broke it over here, and then we did two breaks. We got a break right in this same region, and then we've got everything surging back up again as the market's going. And what this tells us, this is what I told you guys months ago. This is what a bottoming pattern looks like, and so that's what's going on here. And the same kind of pattern is this 1, 2, 3, but the NASDAQ is already hit fib target 1, fib target 2, 13,313, 13,700 is the peak here. So it's not as much, but that doesn't mean it has to stop there. It just, we could see this pattern elongate depending on what's going on when we get, and we're talking about into February, into March, right? That's really what we're talking about here. All right, we'll go to Russell Futures next, and we traded up to fib target 1 the other day. This is weekly again, and now we look at those objectives there. I've talked about this. 2000 was first target. We printed 2016 the other last week. Now we're consolidating. We've got an upward shape market grid, and we still have a really nice upward trend on ppm2. ppm1 is at a trend mode 0.32, and by the way, the algos aren't on here at the moment because I don't have enough data back to do this, so I apologize for that. But they're all looking on a short-term basis. They look the same on a weekly. Let me just update this one. So if you have the indicators, and I've got this set for a model coefficient of 150. Look back. If I change it to 50, you'll see what the algos look like, because there's just not enough data. So that's the number that we usually use if there's insufficient data and you're not getting the algos to print. Then that is where you want to set these up here real quick. So you can just double click on these, put it to 150, and hit that, and then you've got the algos. So the weekly, this is not as strong, and I've been talking about this, is the Russell continues to be the laggard. And even though all of these indexes, I won't go on an index rant here at the moment, but what I will say is all these indexes are top weighted. And that's the beauty of all the indexes in Wavetech and PortfolioXpert, my product, as they're non-weighted. They're basically like equally weighted, and they're price weighted. So there is some bias there based on price, but it's an average price of everything. So it gives you more of a realistic view without the weighting. It's more non-biased, we'll say, where most of these indexes, the Russell, the S&P, everything, NASDAQ, everything's cap weighted, and the Dow Jones has a divisor that they use to calculate it. which kind of exaggerates the prices of the index a lot. So, but anyway, this market has been lagging quite a bit from that standpoint. So anyway, so let's move on. The rest will go fast, I promise. Okay, so the 10-year continues to move higher. The upper end, this is the weekly. The algos are suggesting, at least on the 10, that we're going to continue to stay above the 10-period moving average. And right now, that number, let me get the value over here, is 359. We went out at 365. I've capped off, suggest that we're 370, 378 is an extreme on the upside from a weekly standpoint. And I think we'll just come back into pattern. I'm calling 335, we'll round it even better to 380 is probably the top end of the interest rate. So I don't see these things, although they're starting to look a little bullish here, meaning that rates are going to go much higher. But at the moment, I think we're going to see some stabilization. There was some interesting moving around in the yield curves today. And like I said, I've been threatening you folks to go through my yield curve analysis. Let's do it at the end of the week, tomorrow night. Staying with the weekly charts for crude. Crude is starting to attempt to get a little bit of a rally. We actually have some Fibonacci targets here, 87, 94, 98. And you probably saw some of the reports. Even Joe Biden was able to admit that crude oil is going to be not only around, but it's going to be higher priced. And I even saw there was a bunch of OPEC members commenting that, hey, that crude's just going to stay higher for a while. Well, if you disrupt supplies and you do all the things that we've seen, and plus if they do decide to fill up the SPR, then that's going to be somewhat of a layer on here. But everything looks like we're probably going to start to print up. What my expectation is, if we stay above the 10-week moving average as we come into Friday's close, as soon as Friday's close down on Sunday night, we should get the market grid, everything to turn up, and we start to set up a slight upward channel to the upside from the market grid viewpoint and start to move at least to fib target 1, which is going to be 88. Fib target 2 is 94. We could easily move back into those ranges from that standpoint because markets are trying to have a little more stability, and especially anytime somebody does a victory lap on anything, even if somebody's bragging about a trade. One of my old buddies on the floor used to always say, never celebrate a trade. If you're celebrating, you better be selling something to make, you got to fool the market god. So celebrate is SELL, great. So that was an old joke that used to always say. And I don't know why, but if you find yourself celebrating, feeling really good about a trade, you need to take some profits. You need to fool the market gods. Just know that's the way it works. Don't know why, it doesn't make any sense. I'm sure everybody has experienced that. How many people have had that happen? Make a comment in there that every time you feel really, really good about a trade, two things happen, especially if you haven't entered. It probably doesn't work. But if you're in it and you're like so excited it's going up or going down in your favor, and you start talking to buddies about it or doing that you get a reversal. So be careful. Restrain yourself from excitement, from exuberance when you're trading. Anyway, let's so we got gold and Bitcoin, and we'll be done finally. So gold's interesting. We're going to stick with the weekly charts. The 10-week moving average is at 1865. We saw a 73 low this week, so we traded just above that. the algos, while they're declining, you see them declining on, they're suggesting declining. We're still staying in weeks from now. We're still in trend mode. Even though they're declining, all they're doing is burning off some of that angle of attack, but they still have an adequate angle of attack to maintain that trend line. That this should be an area that you can trade off of on this 1865 level. It is going up right now about $7-8 per week. So that 1865 is going to be, let's just call it 75. It'd be around 10. But we should see this pattern continue. And my expectations are, if we can trade and get above here on a, we're looking at R2 1906, if we could print up that high, which is a little optimistic at the moment, but really not that much, another $10-12. If we can trade above that on Friday, we're probably going to see the market grid turn up here and really just set a sideways range and maintaining this upward slope of that 10-week moving average. But I don't think you need to go to the dailies. We'll just stick with the weeklies for tonight's analysis, and that's pretty accurate. I think we're in really just a consolidation phase, and we're not going to see much here from that standpoint. It's going to, like I said, we've got enough momentum here on these an angle of attack to keep this thing going. All right, this final market here, Bitcoin. Been talking about it coming back in. It's doing that. We 20. Let me get to the number here. We're at 22.8. Still looking at coming back in toward 21.2, 21.5. Should continue to pull back in here. And the algos. This is a weekly chart, so the algos are suggesting that the 10-period moving average, which is at 19,750 and rising, 19,750, rising about $600 per week. That's going to put us around 20,200 plus. That's going to be major support there. And I really think we're just sandwiched right now between around the 21.2, 21.5 and the upward range here, looking at maybe as high as the 200, which is at 26. I don't see us getting above there. I think these recent highs that we had around 23.3, 23, actually it was almost 24. We should just kind of stay in this range. And it looks to me that if we stay down into Friday, we're going to get a lower market grid coming into next week, which should put us into these numbers on S1, S2. Okay, let's be nice on the timeline here, folks, on the chat. Stick to the markets. Okay, folks, let's go ahead. Okay, so that'll do it for tonight. Thanks for listening to my rant and going from there. Yeah, so Trader SLA, yes, that is exactly right. The that configuration, it's negative and inverse. I have an article I'm writing on Substack that I'm hoping to get out. I'm hoping to get a little work done on it tonight. Maybe I'll get it closer to being finished, but I'm writing a pretty big article on the PPM's philosophy, the origin, and putting together quite a bit of the angle of attack and the numbers and what they mean. So hopefully that'll be out soon. I've been working on it for weeks, I think 3 weeks now. So it's gotten pretty ugly. I think it's well over 2,000 words at the moment. Anyway, folks, thank you so much for watching. We got one more night, tomorrow night. Those of you in the live room, I'll see you there tomorrow. Have a great day trading and be safe. We'll see you then. I got to give you a shout out, man. You're working around the clock. Thanks again. Yeah, hit that like button before you go.